You just sit back and just wonder, like, how low can you go almost? I mean, 5 days now of losses, and we're not talking about small losses either.
In the last week, we've seen the market losing more than 10%, and today we did see a two-year low for the S&P ASX 200 at 3,982 points. As you can see from the intraday graph behind me, we once again finished near the lows of the session, which is quite a bearish signal. And in fact, over the last week, the technicals have all been screaming red. It started with the Standard & Poor's S&P 500 index in the US last week, and if we have a look at the S&P 500 index, the big thing that we've been watching is the breaking of that neckline, and once that neckline broke, it's like the doors open and the gates absolutely being poured in with those sell orders. If we have a look at the Australian market, once again bearish signals. If we have a look at the double top formation on the Australian share market, this is a 20-year graph of the ASX 200. You can see that this double top here targeting 3,325 points, and if we remember to the global financial crisis, it looks like that's going to be an important support area now. 3,120 points is the low that the Australian market reached during the global financial crisis. So altogether an extremely negative session on the Australian market, one where the losses accelerated going into the afternoon, which is a typically bearish signal going into the next day, but really all eyes on Europe as well as the US to see how these two key markets respond to the news over the weekend.
Julia, in terms of where we stand at the moment and what you're seeing in terms of, I suppose, the charts, but also the anecdotal sort of evidence from clients and what you're seeing in terms of the patterns of selling, how concerned should we be about the length, if you like, of this downtrend?
Well, remember, today's falls are in the face of typically good news. We heard the European Central Bank looking at a huge bond buying program to help support the yields both in Italy and Spain, which has been at the centre of the market's concerns over the last couple of weeks. And usually that does provide some short-term relief for markets, but it does look like the markets may be seeing through that move, because we also saw the ECB taking the same sort of position on Portuguese, Irish debt, as well as Greek debt as well. And we know that that was a short-term solution. The ECB, of course, their move is a short-term solution until the European Financial Stability Fund can be topped up. It's got a balance of about 440 billion euros at the moment, but that's not really going to be enough to help support the Spanish as well as the Italian government bonds. If we have a look at these two economies, the third and the fourth largest in the Eurozone area. So really all eyes on Europe and any comments coming out of Germany, because in the end, of course, it's Germany that's going to have to fund most of these payments. In terms of the downgrade to US debt, no one really thinks that the US is going to default, and that's because they have a monopoly on printing money. What this does show is, I guess, another devaluation in terms of the US dollar, because if you have a look at this debt, it's probably going to be paid back with diluted US dollars. So all eyes on a possible QE3, and that's where Jackson's Hole is going to be key. That's where we heard about QE2, and the market's very closely watching the FOMC meeting as well as an announcement possibly coming out of Jackson's Hole this week.
Further quantitative easing?
Well, I think one of the reasons why we have seen a run into gold as a safe haven is you can't print gold, and the markets are starting to factor in the strong possibility of QE3 or whatever it's going to be called, but essentially money printing in the US and possibly in the Eurozone as well. If you have a look at what both of these areas need, they need to see growth coming through to increase revenues and to try and pay off that debt. But in the absence of growth, I guess you have to ask, what are they going to do? And the US looks like it's going to try and inflate its way out of debt by printing more dollars and diluting its currency. And that's essentially what this downgrade, I think, to the US long-term credit rating is, a downgrade to the US currency. Now, a lot of that is factored in. We've seen the Australian dollar reaching brand new highs against the US currency in the last 52 weeks because of the devaluation of the US dollar. But I guess looking forward, the market looking towards more US dollar deterioration, and that's why gold is such a good store of value at the moment, because you can't print it, and that's why investors are looking to gold, not so much as a safe haven asset, although it is, but as an alternative currency.
These, massive sell-off on the broader index we've seen, the amount of companies hitting yearly lows is phenomenal. I mean, you just have to look at some of the price action amongst BHP and Rio. What did you make of it?
Well, it's hugely bearish, not only here in Australia, but all across the region. And if I can just point out the Shanghai Composite, one interesting thing today is that it did officially go into bear market territory. This is China. You can see from the peak in November, it has been on an overall downtrend. And from today, it is in a bear market. So the Chinese market, the Shanghai Composite, in a bear market. If we have a look at the Australian share market, also looking at a loss of 20% from the peak that we saw in April. And one of the features of a bear market is blanket selling. And we certainly saw that. If we have a look at the top 200 stocks today, we saw 75 stocks making a 52-week low. And if we have a look at those companies making a 52-week low, they included our biggest stocks like BHP, Billiton, Rio Tinto's in the commodity space. In terms of banking stocks, we saw Commonwealth Bank, National Australia Bank, ANZ, all hitting a 52-week low. We even saw the staples. We saw Coca-Cola, Amatil, Woolworths reaching that 52-week low. And not only that, we saw all-time record lows as well. So we saw all-time record lows for Echo Entertainment, for FXJ, we also saw it for Goodman Fielder, we saw it for Infigen Energy, we saw it for Treasury Wine Estates. So a number of companies not only hitting 52-week lows in the top 200, but all-time record lows as well. So intensely bearish across the market. And I guess for investors who are looking for bargain at the moment, it is like catching a falling knife. Like I've been saying all week, of course value is emerging, but the key is to start buying when the market flips back up again, because 4 out of 5 stocks tend to follow the general direction of the major market index.